Hello class, I welcome you to this session. This is a continuation of profitability ratio. We have already discussed what is called as gross profit ratio, net profit ratio. We are yet to discuss operating ratio, operating profit ratio and return on investment ratio. I hope that you remember. So it's been a long time that we had a video, but we will have a quick understanding of what is operating ratio so that we can work out problems without any uh, difficulty. Okay, so operating ratio is nothing but this is just the formula. We'll just see through the formula and understand why operating ratio is the relationship between operating cost and net sales into 100. So as you can see that cost of revenue from operation plus operating expenses divided by revenue from operations into 100 is called operating ratio. Now, operating cost divided by net sales into 100 is otherwise represented this way. So, what is operating cost? Which is nothing but cost of revenue from operation. What is cost of revenue from operation? Cost of goods sold. Operating expenses is the expenses that is shown in your P&L account. Cost of goods sold is shown in your trading account. Okay, so the relationship between operating cost and net sales into 100, which is nothing but your operating ratio. Moving forward, non-operating expenses and income are excluded. So what you have to exclude, whatever is a non-operating. See, in the title itself it says that operating ratio. So we are going to discuss what is the that related with operating activity. Okay, so cost of goods sold, obviously it is a cost of goods sold, so obviously it is an operation. Operating expenses, without incurring operating expenses you cannot carry on with the business. So you need to understand operating ratio only talks about operating cost and excludes non-operating expenses. I hope that it is clear. So operating cost, which is nothing but cost of goods sold plus operating expenses. So there are some formulas that you need to understand. Cost of goods sold is, you know already, opening stock, which is nothing but opening inventory excluding spare parts and loose tools plus purchases plus direct expenses minus closing inventory excluding spare parts and loose tools. So inventory always excludes what? Spare parts and loose tools. So opening stock plus purchases plus direct expenses minus closing stock. You know, in the trading account you will have opening stock plus purchases plus direct expenses. By closing stock you will deduct, you will get what? Cost of goods sold. Or cost of goods sold can be calculated in one more formula, revenue from operation. What is revenue from operation? Sales. What is that? Net sales. Net sales minus gross profit will also give you the same, that is cost of goods sold. So cost of goods sold can be calculated with this formula or this formula depending upon the information given in the question. So operating expenses. Now what is operating expenses? Operating expenses are expenses incurred for the operation of the undertaking. So whatever is the operating expenses, office expenses, administrative expenses, selling and distribution expenses, employee benefit expenses, depreciation and amortization expenses, all these are collectively called as operating expenses. So what is the objective of operating ratio? To assess the operational efficiency of the business. So it talks about the operational efficiency of the business and the lower operating ratio, which means higher profit. So as you can see, if there is a lower operating ratio, if operating ratio is less, profitability will be more. So as you can see the formula here, cost as well as expenses. So on sales, whatever is the cost, we are understanding if the costs are less, obviously the profits are going to be more. I hope that this video, this formula is clear. So operating ratio, which is nothing but, you can remember one thing. I will give you one trick to remember this. Operating ratio has two words. So you have two things on the top. Cost of revenue from operation, which is cost of goods sold, plus operating expenses. Please don't confuse with operating profit ratio. Operating profit ratio is different from operating ratio. Operating profit ratio is operating profit divided by revenue from operation, which is your net sales, into 100. Okay, so how will you get your operating profit? Operating profit is nothing but gross profit plus other operating income minus other operating expenses. Or you can use this formula: net profit before tax, add non-operating expenses or losses less non-operating income. Or you can use one more formula, which is revenue from operations minus operating cost. Ma'am, wait, ma'am, it's like so much of formula you're telling me at one moment. I'm not able to pick up this. Not an issue. You can logically understand what we are discussing. Okay, so you have to have a knowledge about trading, P&L as well as balance sheet. So trading, you have your, I'm just writing trading and P&L together so that we will have a clear cut understanding about this formula. You have gross profit, which will be written, I'm just taking P&L account. You have brought down the gross profit, say we have written gross profit. Other operating income, where will you write your income? Operating income. See, gross profit is found with your operating income only. Okay, in your trading there is some operation, you have done some processing, or you have done some trading activity. Because of that you got this gross profit. Okay, and other operating income, there may be some other income that is there which cannot be shown in the trading account, but it can be shown in your P&L account. So there I have written other operating income. Then other operating expenses, where will you write here? Other operating expenses, obviously in the debit side, income to be in the credit side. So the difference of all these elements is called as operating profit. I'm sure that you are able to understand what we are trying to discuss. So net profit, suppose what you have arrived at now. See, net profit and operating profit. Net profit and operating profit are two different things. Okay, so you are going in a reverse direction now. Okay, we need operating profit. This is a direct approach. This is an indirect approach. What is an indirect approach? See, you have your P&L account. Net profit. Yes, we have derived at net profit. What you have to add? You have to add expenses. What expenses? Non-operating expenses you will add. What you have to deduct? You will deduct non-operating income. So if you deduct this, what happens? You get operating profit. It is like indirect method. You add profit, you add expenses, you deduct income. Here gross profit, add income, then deduct expenses. Like that you need to visualize the formula and try to remember. Okay, and the third one is revenue from operation, which is your net sales minus operating cost. What is operating cost? Cost of goods sold plus operating expenses. Just now we saw here operating ratio. Operating cost is nothing but cost of goods sold add operating expenses. So you need to be very careful. Operating ratio is different, operating profit ratio is different. Operating ratio, you have two words. There are two things that you need to remember: cost of goods sold, operating expenses divided by net sales. Here operating profit ratio you have in the thing itself, operating profit divided by net sales into 100. Please remember the formula this way. How will you remember operating profit? Operating profit is nothing but gross profit add other operating income minus other operating expenses. You will get operating profit. Or you can use reverse formula. Net profit before tax add non-operating expenses or losses minus non-operating income. Or you have one more formula, sales minus operating cost. What is operating cost? It is nothing but cost of goods sold plus operating expenses. See, there's one thing that you need to be clear about. Okay, so focus. This is very important. Okay, this is very important. You need to have focus. Now, operating ratio and operating profit ratio are what? Complementary to each other. What is this? They are complementary to each other, and thus if one is deducted from 100, another ratio is obtained. What is this one deducted from? I'll explain. If operating profit ratio is 15%, operating ratio will be 85%. If one is deducted from 100, you get the another. If operating profit ratio is deducted from 100, you get operating ratio. If operating ratio is deducted from 100, you get operating profit ratio. This is what it means. So therefore operating profit plus operating ratio plus operating profit ratio is equal to 100. So this always remember. This you need to remember. They are complementary to each other. Okay. So what is operating ratio? Cost of goods sold plus operating expenses divided by revenue from operations into 100. What is operating profit ratio? Operating profit divided by revenue from operations into 100. Keep practicing. Next video we will look into what is the problems related to this topic. Thank you, class.